This is HSBC Global Viewpoint, your window into the thinking, trends and issues shaping global banking and markets. Join us as we hear from industry leaders and HSBC experts on the latest insights and opportunities for your business. A heads up to our listeners that this episode has been recorded remotely, therefore the sound quality may vary. Thank you for listening.
You're listening to the Markets and Securities Services Outlook, a podcast mini-series exploring the critical topics that will shape our industry in the next decade, including sustainability, digitalization, and emerging markets. Find out what's driving the global outlook for institutional investors and where the opportunities and challenges lie. Thank you for joining us.
So my name is Patrick Wong. I look after the China business development and client management in HSBC Market and Securities Services. I'm pleased to be joined by Amy Cho, CEO Hong Kong and Head of Distribution Asia Pacific, Schroders Investment Management, as well as Daniel Chan, Head of Greater Bay Area, HSBC China. We will be covering an overview about the Greater Bay Area and the opportunities, the upcoming Wealth Management Connect program, the opportunities and the readiness of the program as well. So some of the facts about the Greater Bay Area: it covers 11 cities in China, including 2 special administration regions, namely Hong Kong and Macau, as well as 9 cities in this area. So maybe the first question I will pose to Daniel regarding, can you share with us the Greater Bay Area general dynamics as well as the wealth population in this area?
Yeah, thank you, Patrick. Yeah, thanks for having me here. I think GBA, you've already outlined that this is what we usually call the 9+2, the 2 Hong Kong and Macau plus 9 cities in the PRD, which is a subset of Guangdong, basically the urban area of Guangdong. Population-wise, it's over 70 million, and it's generating a GDP of 1.82 trillion US dollar in 2020. So if we classify that as a country, actually this GDP is comparable to South Korea and Canada, and it's the 11th largest in the world in terms of economic size. Based on a lot of forecasts, GBA is going to become the economic powerhouse with an expected GDP of 4.6 trillion by 2030. So it's a 2.5 times increase by 2030. Actually, each of the cities have its own unique positioning, like Hong Kong being international trading financial hub, and also like in Shenzhen, then it's innovation in Guangzhou, trading within China, and a lot of the other advanced manufacturing. And also, I think in the latest China 5-year plan, the 14th 5-year plan, it's put a lot of focus on dual circulation. Again, one is on the international circulation, which GBA is well positioned because of our window, because of Hong Kong and Shenzhen and Guangzhou for the international side, but also internal circulation, driving a lot of internal consumption, so in boosting the economic growth. And that's also give rise to a large group of middle class, so the wealth accumulation would also happen. So that's the backdrop of the GBA. Now, Guangdong, just now I talked about 70 million population. It's actually 5% by percentage of the entire China population, but Guangdong contributes 12% of GDP, which means that it's already above average in terms of its wealth. But I think if we drill deeper into it, in Guangdong area, actually there are 290,000 families owning over RMB 10 million in assets. So again, it's showing it is affluent. According to a research done by McKinsey, there are about 5 to 10 million affluent GBA retail customers in the region, and many of them actually have strong cross-border needs, in particular interest in wealth and health, which is the insurance side of things, related products. So I think it gives rise to a very exciting opportunity for banking.
Thank you, Daniel. The next question definitely to Amy. So a lot of the market participants are aiming at the opportunities, riding on these statistics. And so May we know about the strategy for Schroders in this region?
Thanks, Patrick. Actually, like you, I found that hearing from Daniel, all the numbers, truly very exciting. And, as an asset manager, we go after markets where there are wealth opportunities, especially when there are also growth of these wealth opportunities. And for Schroders, GBA is actually one of the most affluent region in mainland China. And talk about China, we have long years of experience and also business activities in mainland China. And over the last, like decades, you've seen a lot, I guess, of cross-border activities between Hong Kong, or actually between China and also other locations. Is like we have been distributing funds in mainland China to the Chinese investors, be they through the QDII program or more recently the MRF, Northbound Fund. So with that, actually, we already established quite a national network of our distribution partners, including foreign banks operating in mainland China, as well as the Chinese banks, and also more recently, the fintech platforms, which in a way is help us in covering the Chinese investors geographically, but without boundary. So I think talking about our strategy for GBA is primarily just, I guess, within part of our long-term commitment in developing ourselves and the presence further in surfacing the investment needs of the Chinese investors, including not only the institutional or the sophisticated investors, but more so, I guess, like into the mass affluent, and so eventually into the retail space. So overall, I think our strategy is with this GBA initiative, we want to leverage on that. We want to leverage on our existing presence and experience distributing funds outside China, and also on certain regime program at the same time to help us to position ourselves for the longer term, really onshore business, being in China, and then being able to service the investors in China, including particularly first start with the GBA region.
Thank you, Amy. Can I turn the question to Daniel then? Definitely, actually, Schroders has a lot of the development plan in multiple channels to attract about the investors' demand and so on. Definitely, GBA is a core part of the HSBC's growth plan as well. What is our bank strategy in terms of the GBA side?
I would say when we talk about GBA, obviously one of the key words that we would hear a lot is connect. We definitely cover wealth connect, and then insurance connect, and all that connect. And I think HSBC's all along our string is the international connectivity. And that's actually would reflect very strongly in our focus in this area. But we're not just globally connect, we're also actually, Hong Kong is our home market, and Hong Kong is part of the GBA. So we are actually also have a lot of local insight in the GBA area. Hong Kong aside, just talking about Guangdong PRD, we are the largest foreign bank with our presence in 21 prefecture level cities in Guangdong, leveraging on the SIPA scheme some years ago. So we've been actually building our presence and building our understanding of the place a lot. So our vision is actually helping these customers to have a kind of unified, kind of one GBA bank concept, so they can leverage on the strength of HSBC to reach out to the international world, but also for the international world, including Hong Kong, to also get into the GBA area. So it's actually two ways. So in many ways, I would say it actually resembles the dual circulation that we talk about. So we are facilitating development in GBA, but also spanning the globe. When I say that, I'm actually referring both to the business and the individual. For business, I think in the past, we always have the thinking that Hong Kong is a trading hub, China is manufacturing, the world's factory. But actually, this is gradually changing. I think the landscape in particular, like in Guangdong, it's a lot of manufacturing has moved out, we know that. But there are a lot of new economies also emerging, some exciting startup, and also like healthcare and cross-border e-commerce become the key. Cross-border e-commerce, for example, now account for 68% of the entire China, and it's going to reach 80% very soon. And it's been growing like 30% year on year. And together with Hong Kong, it would be a perfect solution for them to go international. And also riding on the growing middle class, the spending power, I think I can also see increasing interest from the rest of the world to try to sell into China, because that's capturing the opportunity of the mass affluent group. So that's the circulation, that's the connectivity on the business side. And also, I think on the personal customer side, again, increasingly more mainland Chinese residents looking for offshore investment and insurance opportunity. And also, I think increasingly Hong Kong people is also interested in capturing the very high growth opportunity in the GBA area. So again, we see the connectivity and we are well positioned to do that. So we've been investing in many ways, including the setting up of the GBA office and my appointment in March this year, facilitating more of the cross-territory as well as cross-line of business collaboration to realize this opportunity. We are also investing in digital and also in wealth managers and financial planners, and also commercial banking relationship managers to help us realize the opportunity ahead.
Thank you, Daniel. Definitely your new role is very important in terms of our overall Greater Bay Area strategy. So it nicely turns to our next topic, because Daniel, you mentioned about the connect, right? So when we talk about GBA, a lot of the recent attention also come to the upcoming Wealth Management Connect program. So maybe I give a very high level backdrop. The Wealth Management Connect program is a cross-border program allowing banks to distribute products to the cross-border residents in the Greater Bay Area. Now, all the industry players now saw this as a huge opportunity. My question to Amy is that, what is the strategy from Schroders to capture the Wealth Management Connect opportunities?
Okay, thanks, Patrick. GBA is one of the most affluent region in mainland China, and then 20%, I think, of the bound actually in terms of high net worth investor population in GBA is constitute 20% of the total in mainland China. We have a new billionaire in mainland China every 2 days. Is according to the Private Wealth Management Association survey. So you can imagine, I guess the wealth growth is really there, even though I think just mentioned about the launch of the Wealth Management Connect regime at the initial stage, there are some restrictions or guidance is each GBA investors can invest only up to 1 million renminbi, so they may not be considered as so-called a high net worth. But you can imagine that this gives the asset manager, the funds industry an opportunity to provide investment management products to the GBA investors, maybe more so from the retail, those 1 million. But definitely the regime we expect that will become, I guess, will develop further, that it will go beyond just the retail, that into the high net worth individuals, and include almost, I guess, both the retail investors as well as the more affluent assets that we can manage. And also, I guess this Wealth Management Connect is a bank-specific regime, and actually it's an extension of what asset managers outside mainland China can do. We have been distributing to mainland Chinese investors through the current regime, like the QDII, the MRF, across the border. And I think the Wealth Connect is just give us another channels, another means is through the banks in Hong Kong, that we're still able to distribute our investment products through these Hong Kong banks to the investors in the GBA region across the border. So without us really, I guess, the need to have like 2 layers of regulatory approval, additional licensing. So one thing, because of this, then you asked about the strategy. So what is our strategy in capturing this Wealth Connect opportunity is, first of all, take Schroders as an example. We have been in Hong Kong, this intermediary market for a long time. I would say partnership and collaboration in supporting the banks in Hong Kong as they developed the Wealth Connect initiative in servicing the GBA investors across the border. Even though initially, I think there's a bit of talks about like the regime, once they're account opening, and now it's actually you have to do it like online and offline. But in terms, I guess, of the marketing or the subscription into the investment products provided by the banks in Hong Kong, it's also, I guess, of omni-channel means is if investors, they stay within the GBA region, then of course they need to have adequate information, investments market, investment product related, in order for them to make an investment decision and initiate a transaction themselves. because it's primarily on execution only basis. But when the investors can cross the border, coming to Hong Kong and then to be receiving, I guess, the investment advice from the banks, as what the banks has been doing to the Hong Kong investors, then of course, then they also get the investment advice support to help them to make an investment decision. So for asset manager, is for us is we will leverage on the existing suite of funds that already onboarded the bank platform, but more focus is on about how we can we should support the banks in terms, I guess, of the marketing, I think like the investor communications, in order to ensure that the GBA investors got the adequate information about the markets, about the products, to help them to make an informed investment decision. And this will be an omni-channel support that we have. So digital marketing, digital content, and at the same time is, I think, branding is also very important, not only to Chinese investors, but generally to the all retail investors. So for us, our strategy is we also need to start building our brand, the brand of Schroders within the GBA region. Currently, we have been doing so because we have, as I mentioned earlier on, we have a joint venture already about like 20 years ago. And it's public news that we are also like pursuing the wealth management, the WMC joint venture. At the same time, we're also pursuing a long-term really as establishment of us having a full-fledged presence in mainland China to do FMC business. So all the branding are in place, especially we have a WOVI in Shanghai today. So we do have PF and the private funds business. So in particular, we're focused to building brand awareness, like within the GBA region. This will help investors to get to know foreign asset managers branding as they consider these investment products or services offered by the banks in Hong Kong. And of course, another opportunity is in the past, like Hong Kong managers in Hong Kong, we run offshore funds. At the same time, we also do onshore Hong Kong domiciled funds. I think the startup of this like Wealth Connect regime is a very good space for asset managers to consider future product development. It's not only for the investors in Hong Kong, but also for investors across the border, but they're only distributed in Hong Kong. So I think this will give an asset manager a chance to further develop and also supplement existing offering under the Hong Kong domiciled vehicle, be they previously unit trust, or more so the Hong Kong is also talking about the OFC as well. So definitely, I think product development, client servicing, digital marketing, these are the main areas that we're focusing on as we continue to support the banks in pursuing this Wealth Connect regime.
You greatly point out that actually, distribution side actually, are also depending on banks' distribution as well. My next question to Daniel, I think that actually, HSBC has also conducted a survey for the Greater Bay Area investors regarding the response if if Wealth Management Connect is set up and so on, what is their appetite and so on. It seems that the result is really positive. Can you share with us some of the angles from the result?
Yeah, sure. The survey was conducted in the fourth quarter 2020. It's an online survey for 1,600 citizens living in the 9 mainland cities in the GBA area. They are either currently already own or intend to take up financial products in Hong Kong in the next 12 months. Among the surveyed respondents, over 80% of them actually plan to invest in Hong Kong via the upcoming Wealth Management Connect, so really encouraging. About 2/3 of the respondents said they are optimistic about the Hong Kong market outlook, and 70% intend to increase their share of assets in the territory. 67% of the respondents identify wealth accumulation as the key investment objective, following by preparing for life after retirement and also saving for their children's education. For those who are already invested in Hong Kong, 38% of them have funds and 37% have stocks as the most popular products. And a majority of the respondents, 65%, plan to diversify the investment products in Hong Kong. And almost everyone who is aware of the concept of fintech and ESG finds it very appealing. So I think actually it seems that many people are already closely watching for the development and anticipating that the opportunity that they can get from this Wealth Management Connect.
Thank you, Daniel. So the result is very promising, and you also hinted about some of the hot topics on or actual demand on the ESG and so on and so forth.
Yeah.
maybe I turn the question to Amy. Amy, you really point out that for Schroders, you have multiple, strategies. You have multiple channels now. You have your own movies onshore. For the distribution, you have participated in the mutual recognition of funds previously. You have your own joint venture in China, providing QDII products to the investors and so on and so forth. Now you have the FMCs planning to set up. You also have the WMC joint venture as well in China. So with all these channels, how can you see about the wealth management connect channels compared with different channels and so?
Okay, it's a good question, Patrick. I think I would say positive, very positive. If you compare, I think this like Wealth Connect regime, we even though it's a bank-specific regime, as I've said, we don't need additional regulatory approval to the products. As long as the banks carry the funds, they can primarily carry the same set of funds, or maybe a smaller set for the GBA investors, and we don't need license, special license. We don't need additional license for these funds to reach out to the end investors in the GBA region. There are definitely better flexibility. I think, Patrick, you know very well. For example, the MRF, the more recently rolled out regime is, well, even though it's still SFC authorized Hong Kong domiciled funds, but there are some additional requirements. For example, it must be managed by the managers in Hong Kong. So in a way, there's no subdelegation allowed. To some extent, it constrains the product design. It could be more Asian focused or Hong Kong, China market focused. So because rarely we have a global equity team, for example, sitting in Hong Kong for the foreign manager. So I think under these Wealth Connect, actually subdelegation is possible, is feasible. And then another part is, okay, because of the concentration, previously under the MRF, the knockbout fund regime, the funds distributed in mainland China under MRF, we can raise only up to 50% of the funds AUM from China. Then this time under this Wealth Connect regime, there's no such, 50% cap requirement as well. So all good is in terms of the flexibility. I think this gives the Chinese investors, even though to start within the GBA region, an access to a broader suite of funds authorized by the Hong Kong SFC and Hong Kong domiciled. So this will give investors choice, more option, and also for the banks, and then how we support the banks and for the banks in Hong Kong to start really, surfacing investors not only domiciled in Hong Kong, but also, in the GBA region. This goes back to what Daniel mentioned earlier. It's really about connectivity. That Hong Kong and mainland China, I think GBA being a closest proximity region, with the increased connectivity, I think there'll be a lot more cross-border activity.
To both Daniel and Amy. So Daniel first, regarding the readiness, actually, how ready are we actually as a bank?
We've been preparing for it for months and actually probably more than a year as we gradually, a lot of those detailed guidelines gradually unfold and with more clarity on the 6th of May when the consultation came out, and pleasantly surprised with the southbound remote account onboarding, because I think previously they did say some of those officials or regulators did say that we probably need to wait until the border opens. So that is actually a positive sign from a southbound point of view. I think we've been investing quite a lot in multiple areas, including system and processes, because I think there are also different control points, because I think the scheme is developed in such a way that it's closed loop. So you can't freely move the money. I think it's a very cautious step, because I think this is going to really to the retail world, not just on the institution side. So I think I can see the reason why the regulator want to be a bit more cautious in fund choice. And for southbound, also the eligibility of the individual who can participate in this scheme, including the consideration of whether they are in Guangdong area, and also whether they have the investment experience and their wealth accumulation as well. So there are multiple things that involve some process and system, so which we're getting ready for it when it's coming to launch in the very near future.
Thank you, Daniel. And Amy, from the asset management side, how ready are you for the launching of the program?
Yeah, definitely. I joined Daniel to say we are ready. The banks are ready, asset managers are ready, because for us is, as I've said, we don't need additional approval or licensing, but we spend a lot of time working with the banks in identifying which are the funds suitable to support the launch of this regime. I think earlier on, I may not have mentioned that it's not only SFC authorized or SFC domiciled, we also have to, actually is a subset, as that's a subset because it has to be low to medium risk to start. So I think we just need to find out which are the funds suitable for the banks to start, this regime. And of course, we have to make sure that, well, naturally, we expect that when the regime roll out, when we need to do not product solicitation, it's primarily education, like investor sharing session. Naturally, I think Cantonese is not good enough. We have to make sure that our staff, they can speak actually fluent Mandarin so that we'll be able to communicate more friendly and efficiently for the banks to communicate with the GBA investors. And of course, in terms of marketing materials, of course, like we have to make sure that we have simplified Chinese version available. So I would say that for the regime to start, we're ready. But I will also add that the readiness has to evolve because we expect the regime to roll out is really on an incremental approach.
So I think from Daniel's perspective, actually from the bank on the distribution side, the distribution means actually in China is evolving substantially. Previously, actually heavily relying on the bank distributions. Then actually, well, a lot of the demand go to, electronic platforms on the distributions and so on and so forth. From HSBC perspective, actually, have we coped with the evolvement on, distributing products per se?
Yeah, well, I think in the modern world, I think there's a word that is getting more and more popular. It's called agile, right? You have to be very agile in, as Amy said, go along with the regulatory regime. It's opening up gradually in different components, but not all at once. Like we start with like the low and medium risk in the product angle, but also I think we do envisage that at some point it will be completely digital from onboarding all the way to buying and selling investment product. But right now, what we see is the onboarding journey still need to, the account opening still need to happen, part of that at a branch. I think part of that is also related to the KYC requirement. And part of that is also related to the eligibility check, which is not something that you can quickly automate it within a short period of time. So I think that is still something, there's some touch point at the branch. But I think we've been building some of the pre-branch process to be very digital. And once the account is open, actually everything can be done online. I think we are moving towards that, and I'm sure this is a journey, and we'll be opening up more in terms of the digital capability.
Thank you, Daniel. So Amy, you previously point out that the schemes allowed the I think selling of the product actually will, if the investor have to go to Hong Kong from the Greater Bay Area, then definitely we can, from the branch and so on, we can do direct selling. But actually, well, on the cross-border branch perspective, actually is mainly on the execution mode only. And so from that issue perspective, actually, how do you plan to, overcome this one? How do you work closely with the bank to, maximize the selling opportunities on your product perspective?
So in terms from the surfacing or the strategy perspective, is no different, no less than what we are doing today, but more. So I've mentioned, I think Daniel mentioned I think the digital savviness of the investors or the residents in the GBA region, it could be a lot more fast, advanced than the investors or the residents in Hong Kong. So I think digital content and how we work with the banks in terms, I guess, of enrich and ensure that we could have a good investor communication. And I will rephrase that because it's not really about product selling. And that's the whole intention. So it's really about investor communication. So if the GBA investors, it so happen they will be visiting Hong Kong once the border open, and then they're doing the transactions with the banks in Hong Kong, I think definitely we have the in-person like investment advice offered by the banks. And of course, our role is really to support the investment consultant how they're introducing these products, depending on the know-how sophistication level of these investors. So this will have to work closely with the banks to see what their needs, and then we accommodate, and also we tailored special marketing materials, and maybe I guess a 3-minute or 90-second clip that investors can really refer to easily from time to time. And also, I guess in terms, of the within the board, inside the GBA region, if any like educational activities would be allowed, and of course, then we will be working closely again with the banks in sharing market views, insights about investments, not only about opportunities, but also, I guess, to remind investors about there are some potential market risk that they will be exposed to, especially when they are really looking for diversification from the current investments, but which are predominantly more domestic, I guess, from domestic Hong Kong, China into more regional and also global portfolio. And one thing I think I would like to add is, like a manager, we're also going beyond our role as a product provider. We're really, I guess, going forward as a partner to the banks that become more embedded into the ecosystem. It's really about marketing support, investor communication, and even, I guess, portfolio advice. So I think all these we see is actually a chance for us to even fast forward, because Hong Kong is a very enclosed and also very convenient, efficient city. I think digital savviness is here, but that may not be an essential need. But GBA is a very broad region. There's an essential need for investors or consumers to go digital. Then I think this will definitely be the area that we will focus a lot more on in providing adequate information and also insight in order to facilitate the GBA investors to be able to do, I guess, the investment decision, even though it's on an execution only basis.
Thank you very much, Amy. Thank you very much, Daniel, for your insightful sharing about the Greater Bay Area as well as the Wealth Management Connect opportunities. And so I think that definitely the audience actually can, pick up some of the, tricks from you guys actually in order for them to plan ahead for their strategy for the Greater Bay Area. Thank you very much.
This has been the Markets and Securities Services Outlook, a podcast mini-series produced especially for HSBC Global Viewpoint. To learn more about HSBC's Markets and Securities Services offerings, visit gbm.hsbc.com/solutions/securities-services.
Thank you for listening today. This has been HSBC Global Viewpoint, Banking and Markets. For more information about anything you heard in this podcast, or to learn about HSBC's global services and offerings, please visit gbm.hsbc.com.